So let's go talk about Cathie Wood. Sawyer, we've heard Cathie or Elon. Do you agree with Elon where he says, Cathie Wood, he said it 3 times, as the most accurate forecast or report, both robotaxi and the stock price. And yet there's many in the Tesla community and, other stock investors who think, hey, their fund has been just a disaster. They've lost money for 5 years, but they're investing in disruptive technologies. But then here's Elon supporting that. What's your thought on that, sir?
I think the business they're in, investing in studying disruptive technology, is inherently much more risky than just your average portfolio manager picking the best tech stock or like an ETF, right? So I think naturally she's probably going to have more failures in terms of what they invest in than the average portfolio manager. So I think their reputation has taken a pretty big hit in the last 2-3 years since a lot of the stocks have come down that they've invested in. Having said that, I do kind of agree with Elon that I think Cathie Wood and their team understand Tesla's long-term potential probably better than almost any other portfolio managers or Wall Street types, specifically on the self-driving front. They tend to be a little bit more optimistic maybe than they should be. Their price targets are pretty wild, but they seemed like they were wild too in 2018 and 2019, and then they ended up being right. So doesn't mean they will be right again, but I think they tend to understand it pretty well.
And Xander, what's your thoughts on Ark Invest?
Can we bring Jeff back up?
Yeah, I'm
he
doing
got
that.
disconnected. Yep. So I think Ark is, has the right research. I wear the golden goose on my chest very proudly, as I've mentioned in previous spaces and videos. I think Elon pointing to their research with Moore's law and Wright's law and understanding S curves. I think that's the important part to, but it's such a far out view that people, they're listening to analysts that are short term minded as opposed to 5 years out. And Cathie has been right in some sense and rode that wave, but I think Ark has made some interesting choices over the last 5 years. So I don't pay them much mind now. It's really just understanding those growth curves and the discounting of parts. So coming down the curve of supplies. So those two things work well together. So that's kind of what I think about them.
Thanks. And then go ahead, Simon.
Yeah, so I think they've done tremendous work on it. Sasha or Tasha Keen, I think is her name. She's excellent in the research she does on Tesla. And I've listened to a few of their podcasts where they're talking about autonomy and the robotaxi and Tesla, and they don't all agree at Ark. And sort of my take on it is, and I've read all their research, it's good. It's actually really good. But I don't, I hope they're not listening to this, but I don't agree with all their takes on other companies. There was a period where I went through their book of companies and we did our own analysis and said, they seem to be right on Tesla. They must be right on other things. And we went through their top 10 holdings. And I didn't agree. I thought, Teladoc, this is going to get, there's other competition that's going to come in. DocuSign eventually will get, taken over by Microsoft. Not taken over, sorry. They will find their own way. And the same thing with Zoom. Anyways, some of their top holdings, I just kind of looked at it and we said, wait a minute, they're right in the aspect of where they're going, but the competition owns that market. And there's a danger there. And I think the market has recognized that in a few of their names. But that being said, the research they're doing is amazing. But when we take this same analysis and we do it with Tesla, we say, look, they're already so far ahead and everybody's just trying to catch up. So I respect the research. I've learned a lot from it. And I think their numbers are actually pretty accurate, if not possibly conservative long term. I don't think they've been modeling out Optimus. I think it's very early and difficult at this stage. But their work they've done on autonomy and full self-driving have been excellent.
Okay, and how about you, Jeff?
I think people just put, can you hear me okay now, Herbert?
Yes, perfect.
Yeah, thanks. Sorry. I think people just, first off, I think Ark thinks in these like 5 and 10 year blocks. And I think people are trying to like nail them down to like the minute, hour of some of their predictions. You know, I go back to 2018 when they predicted Tesla would get to, you know, whatever, 2,000 a share by 2022, and Tesla did it even a year early. And they were the only people saying that, and everybody was laughing at them. But I think if you try to like, I think what you have to do is like absorb the research and kind of make your own decisions based off of that research. But not, you know, you have to like think independently, basically, is what I'm saying. And I can agree with Simon as well, which is agree with a lot of their research on Tesla, and some of the other stuff maybe a little bit more suspect. I honestly, I spend more time trying to understand the research and the thinking behind it. I think they have pretty good insights, and there aren't a lot of others that at least put themselves out there professionally that would, you know, that are similarly aligned. So I think they're onto something, but I don't think you like run your portfolio daily based off of or 7 p.m. email I get Central Time.
Okay, perfect. Thank you. All right. So one of the things that Cathie Wood did talk about was the data advantage that Elon and Tesla has, and she went at length talking about all, you know, the strategies to get the most data. So Sawyer, one of the news that came out last week was that Elon did a walkthrough of the Tesla supercompute cluster, Giga Texas. He's calling it the Cortex. You were talking about how it's 100,000 H100, H200s, massive storage for video training for both FSD and Optimus. Is the panel here feeling like pretty good about Tesla's and Elon's efforts to have the largest supercompute compared to other competitors? Is it important that they have the largest data center out there? Are they competitive at this point, or are they falling behind? What do you guys feel?
Well, I think from a competitive standpoint, there are no other, certainly legacy auto companies building these supercomputer clusters like Tesla is. There are other tech companies, and maybe, you know, a Ford or a GM would plug into their systems. But in terms of doing it in-house, Tesla's really the only major auto manufacturer doing it in this way. So this system's going to be, you know, a $2-3 billion system, and it's absolutely massive. The amount of power they're going to need to keep this thing running is immense. So I imagine they'll have some sort of mega pack backups for the off peak or the peak hours rather. But yeah, I think this is a huge competitive advantage for them, and I'm hoping we see a big leap forward in FSD performance. You know, once this thing has a few months and the videos can train on it.
What's I think really impressive, the speed by which they can set these things up. Obviously, we've already talked at length about how they have the buying power from NVIDIA, and of course they've got their dojo, but the speed of creating these data centers was at one time, they said, took us 19 days. Do you want to speak to that, Jeff? Explain what exactly they needed to do to make that happen?
That was actually what I was going to comment on. You led right into it, which is that's everything. Elon has the team focused on and they're focused on utilization. That's the key thing, and that comes from the top on down, which is we procured this asset. It cost billions of dollars, but just the procurement of it and bringing it in house versus having that product up and operational. That time from T = 0 to it being fully operational, the fact that they were measuring that in days and hours tells me that is a very skilled operational tactician that's focused on time to margin, time to break even on a very, very large fixed asset. So just to put that in plain terms, he wanted that silicon, he wanted those GPU clusters to be in and operational and doing real work as quickly as possible. And that starts the clock and drives, you know, that asset to on its way to break even. And the fact that they measure it in days and hours, I think is I think is critical, and I think it's really important. And if you're, if you're an investor in Tesla, you're basically supplying them with capital so that they can invest. And they're focused on something called ROIC, return on invested capital. And that's a very good thing, that they're very, I would say, frugal, and they're focused on the speed and the return on that capital. So do they need, I think it's an interesting thing. Like, the answer is I don't know how much compute they need. I don't think any of us on the outside do. I don't know if they know exactly all the time. I think they're trying to real time adjust it. And I think that's actually good, that the buying power of this compute during this critical time period, that Elon can actually kind of pool his buying power of, like, he's the highest person in this purchasing procurement relationship. And if he has to allocate between companies and he does it the right way, you know, he's therefore helped both companies get to a level of buying power that they wouldn't have had just acting on their own. So for everybody criticizing what happened between, like, why was there material moved from this company to this company, just know that I've seen this happen before. It's a process called allocation, and if it's done properly, it improves ROIC and it improves time to value on the asset. And that's what you want your leader doing. And again, I'm not just saying, like, oh, because I agree with everything he does. I'm just saying, if they did it the right way, that's exactly what you would want to see happening as an investor.
Thanks, Jeff. Good that JP's here, because go ahead and answer that, JP. But then also I want to ask you about the energy megapack requirements of these supercompute clusters, and what do you guys think how Tesla's planning to power them? We've seen Amazon build a data center right right in front of a nuclear power plant. What is the plans for Tesla? Of course, they have their Buffalo, New York. I think Omar actually asked Elon, is it because of Niagara Falls or something like that? I think he said yes. But yeah, megapack requirements of these supercomputers. Can't hear you, JP. Are you there? There you go. Ahead.
Hey, sorry. Yeah, I was just gonna say, to Jeff's point too, I don't think you want to race to build, like, to buy everything now. Like, the rate of change on the tech is gonna be, like, improving. So, like, in 2000 or 1999, you wouldn't want to buy, like, all 56K modems and just build around that. Like, I fully expect there's dialogue for, like, improvements coming. So you kind of want to, like, plan for the now or the short, like, expect that there's going to be improvement over the next, like, 5 years, right? We're totally not at a terminal state for AI here. And then as far as energy goes, I think we're just going to see continued. I don't know if you guys saw, like, the Sunrun deal, but there's going to be more and more, like, mega packs mixed with traditional energy solutions and sustainable energy solutions to be able to offset the grid demand for the technology. So I continue to believe that we're going to see more hybrid, like, installations where you have traditional, nat gas or peaker plants plus wind and solar, and you'll see larger, either, like, kind of behind the meter or current, like, public-private megapack installations to basically be able to feed the data center demands. I mean, Blackstone, there's an interview today with John Gray. I suggest everyone go watch it, talking about his underutilization of the data center purchases due to the lack of energy. So, like, I think regardless of whoever wins the election, the trajectory of, like, energy storage is still going to become a globally significant business, just because the data wars or the AI, race wars kind of require it.
Yeah, when do you guys think that the energy wars are going to start happening? Sorry, you reported this morning that Tesla signed a $750 million deal for construction of a battery storage facility in Queensland, Australia. That's just a traditional energy deal. But at what point will we start seeing these kind of battles required for the data centers? Anybody here have thoughts on that?
It's already happening.
Go ahead, explain that.
Like, I think the project plans that are being, like, submitted are a mix of, like, either fully private or, like, public private, and you can kind of look them up. And the big ones will obviously be, like, the proxy for how smaller ones will go. But it's just the grid really like there's actually two schools of thought. Just for context, everyone thinks that the energy generation was the demand in the U.S. at least was overestimated, and that with the amplification of storage solutions, like it's really just about being able to control it and utilize it during peak. So I think people are really getting smarter on the subject, and I think right now, I think that's why the storage business has kind of been. You see Cattell, you see LG, you see like Tesla continue to push in it. It's really a land grab because once you get set up, then it becomes like a services contract um, after you kind of get the install done. So I think like whoever can scale this, build it, and get it installed the fastest is kind of going to be the leader. But I also don't think it's not like the cars as much. I think there's going to be there's not going to be like one or two winners. I think you'll see like geographically, like maybe a handful, like somewhere between 5 and 10, meaningful providers. But I do think the software services is going to be the crucial angle for who gets like the big projects and the real scale.
Okay, we'll get to you, Simon, but sorry, you're going to answer that question.
Yeah, I was just going to add that I don't think a lot of Tesla investors are aware of how much competition there is in the commercial energy storage space, especially over in Asia. And this is why I partly think that Tesla opening up their Giga or the Shanghai Mega Factory in Q1, Q2 of next year will be really strategically important. But we've already seen Tesla drop prices pretty massively on mega packs, and I think part of that is, materials, cost improvements, and whatnot. But I also think the other part is there's just been a lot of competition, and there's of course the margins are still incredible. They're in the low to mid 20s, and I think they will continue to be as they increase production output. But I think we'll see a lot more competition. I think JP is right in that there won't just be one winner here. I think there's going to be multiple players.
Yeah, Simon?
Yeah, we read an interesting note from Goldman Sachs about a month or two ago, and we sort of sent it out to all the teams across Wellington Altas. And basically what they're looking at now, and they're distributing this to all the teams within Goldman Sachs, is look at the energy players. So to JP's point, like he's very accurate in his analysis of this, is that there's probably not going to be any. You can actually see this in the utilities in the U.S. You've seen them rally, quite substantially, and that's not just a interest rate play. People are actually recognizing, and I'll give you an example of an energy play is Brookfield Renewable. They signed a deal with Microsoft recently to basically provide up to 10 gigawatt hours of renewable capacity for their data centers. And to put that in perspective, that's probably a quarter to a third of all Quebec. So you're talking about enough energy to supply a state of 2 million households. I mean, this is massive. And when we were owners of Brookfield Renewable as well, and we look at their backlog and the amount of people that are signing up to get renewable energy currently, and this company has been around for over 25 years, they provide 30 gigawatt hours of renewable energy to their clients, and their backlog is 155 gigawatt hours. So this is sort of what we're talking about within our teams at Wellington, is that this is actually the next AI play, is where is the energy, and not just who's converting energy into AI, but who needs the energy. So it's a big one. And of course the grid is there, and Tesla is right there, and they have the technology to be able to store it and then distribute it properly when it's needed. So, my thoughts, Herbert, like I think that they're going to be a big energy player over just the next two years.
Yeah, that was a great interview I did of you. You pointed out that in the earnings, right, that energy alone will be, what's a 50% growth in earnings, just that alone.
Yeah.
So yeah, somebody pointed out to me, people here know that I've been harping a lot about solar farms, thinking that that's, there's 3 pillars to Master Plan Part 3. Pillar 1 is energy generation. I just can't see Tesla not having any activities in that. Somebody pointed out to me that in the annual shareholder meeting, there was a photo of what looks like a solar farm. So does everyone in the panel here still disagree and think that they're not going to do solar farms? How are they going to power it's energy generation that matters. Energy storage, of course, matters, but still, you need some relief for the grid. How are they going to generate this energy that's needed for these data warehouses, right?
I did not follow. What solar farm are you talking about, Herbert?
I know. It was just a potential that there was a photo on the annual shareholder deck that that looked like a solar farm.
I think it's terrible. It's coming down to bottlenecks, and I think Elon's been pretty clear that he believes in solar as a major form of
Exactly.
generation.
Yeah,
It's
he
just a
said that
question of
yesterday.
when. Yeah, exactly.
He did reiterate yesterday that he thinks that eventually solar will be the main source. Then why wouldn't Tesla get in it? I know it's commoditized. I know that you don't make money on the panels themselves, but they need to start investing in significant solar farms to generate energy. What's your
And
thought on
then
that? Yeah, go ahead.
and then Trump started talking about nuclear warming, and then he's like, "Yeah, I'm glad he changed the subject." Just
Me?
kidding.
No,
I'm just kidding, Herbert.
no worries. It's just going to be better waterfront property for us,
Yeah.
apparently. So, okay. So you guys, are you guys confident that Elon's calling for? First of all, he said that we should hit the $100 billion of sales by the end of this year. I know some people said that he was just like an estimate. He didn't actually state exactly, but that would mean that you need to hit 53 billion for the next 2 quarters. You're seeing China recovering. What's your thought about what's going to happen for the second half of this year? With China, it seems to be moving along quite nicely. I'm actually very impressed that it's working well. Not only is the economy turning around, looks like, or at least stabilizing in China, but sales of the relatively more expensive vehicles that Tesla sells is still keeping pace. This is before they release the more affordable vehicles. This is before they have the revised Model Y coming next year. So if they can keep that pace in China at this level, that's a positive versus in between two growth waves, and it could have easily been a down year for China. Any thoughts on that? You want to start, Jeff?
Yeah, I don't think it's common knowledge that people understand. Like when you look at price tiers and you look at regions, there's only about 15% overlap between Tesla and BYD. They sell most of the cars they sell are below $30,000, and besides China, they're not necessarily in the regions that Tesla is selling at globally. So when people try to compare Tesla to BYD, if you talk to the management at BYD or you talk to anybody that knows anything at Tesla, they will tell you that they're actually not actively, in the same price tier competing. That changes as BYD is now starting to do a couple of more expensive vehicles, but they're not really putting a lot of weight behind those models. But that changes as Tesla, as you said, starts producing vehicles below 30,000. And then all of a sudden the competitive dynamic changes where Tesla starts eating into, that area where they don't have any product there today. So if anything, it looks like a chance for real growth with Tesla. Now in China, I think somebody said there's like 125 or 130 vehicle brands competing. It's some exorbitant number. You wouldn't believe it in terms of local brands competing. So at the same time, you have a population of 1.5 billion people. So you have 4 or 5 times the size of the U.S. So in terms of I don't know if that answers your question, but in terms of how they compete today, there's not tremendous overlap to produce the 1.8 million vehicles for Tesla versus the, call it, 1.5 to 2 million. We don't know where BYD is going to land this year on pure EV only, but there's not tremendous overlap, but that changes in about a year from now.
Actually, Jeff, can you explain a little bit more what you expect for Tesla sales? So at one point you were saying that the auto credit loans is falling quite regularly, right? So people who are trying to buy cars can't do that. At the same time, looking like more and more that the price finance to interest rates will be cut this year, maybe even quicker than people are realizing. What's your expectations to happen to people's ability to afford to buy Teslas?
Hopefully, so first off, Tesla has intervened with their own financing, and now they've kept that on, and they've kept it on longer. It's been very successful for them. They're using it in specific regions. They're using them in all the regions now, actually, to be honest with you, but just various different deals to bring that financing rate down. So when people go for those loans, their ability to attain them are greater. So there's an attainment problem right now. There's a rejection rate problem right now, and that's because the average new car rate, again, the average of average, is 9%, and used cars 14%, and then Tesla is buying that down for in certain regions for certain levels. And again, I'm using a U.S. number for that. So in terms of interest rates, the Fed funds rate, we'll get, I think mid-September we'll get a new dot plot from them, and we'll get a new, hopefully they'll cut rates in September, but they're not going to cut. I mean, right now they're about 300 basis points or 3% above inflation, and they're not going to get all that in one or two cuts. It's going to take them, a year and a half or 2 years to cut through that. But the question now is, are they going to cut, a 0.25% or 0.5% in September? And that's what's happening. That's what's being, bantered about right now. This morning we got the producer price index information that came in cooler or favorable, and that would actually promote a cut in September. And now we get the consumer price index information on the buy side tomorrow morning, and hopefully that number is in line or better. There is a dynamic working against it. It's a big one, and this is in the PPI. So I'm glad the July PPI worked out, because the container rates have really started rising again for shipping containers. And I put a message out on this earlier, and part of it is because of this pending. And by the way, there's about 80% of global trade occurs, through shipping containers and shipping ports. So you don't want the container rate to go up. You want it to be somewhere around, $900 to $1,300 container, and you don't want the ports to go on strike. You want the ports to be more efficient, more automated, and you want to lower that price. So none of these things are working for us right now, and the container rates are going up. The ports are, some of the ports are threatening to strike, and this all has to come and converge by the end of September to avoid a strike. So right now that would be working again. That's just one thing in the index. The other thing is insurance rates on the consumer side have really, auto insurance have really ballooned. So anyway, long story short, Tesla's buying down the rates in regions, and it's really helping open up access to consumers. The reports I'm seeing in multiple regions is that the Tesla centers are full, where people view cars and complete their orders if they need to, and it looks like it's pretty effective.
Perfect. Great answer. Thank you for that complete answer. Xander, let's talk stock. At Tesla stock and just stocks in general, is there an appetite right now for growth companies like Tesla? What's going to happen in the macro as we move forward here in the short term? What are you seeing happening to Tesla?
Yeah. Well, let's start with Tesla. You have the 200-day moving average sitting at 203.07, and that was broken through today. There was no resistance going through 200, which is a psychological, since we've kind of tested at it over the last week. It's been wedging in from last Monday, and so there's something about like inside candles. I won't get into details, but if you look at that Monday move, and then we've just been slowly compressing. So that technical move above the 200-day and closing well above the 200-day, I could totally see it pulling back down to 203, and then as long as like the CPI tomorrow is positive, you have the SPY, so the S&P 500, back up to 540s, and like 565 was the high. So if it's all setting up for, and then the carry trade explanation is settling with investors, and so the chip stocks are getting getting a bid, and tech is getting a bid, and so it's hard to predict. Like some are still going to go to cash and be ready for war and be ready for the dip. So it's, but what we are seeing is you are seeing today you saw Meta go up. You saw Google. All of these companies are going up. So it's looking good, and it's just the question is, will it sustain, and what happens when the Fed does lower the rates? I'd love to see what it looks like uh, when the interest rate falls. Do Teslas accelerate in terms of the purchases? Something I loved from last night. You brought up the topic, but we didn't really talk about it. I love that Elon didn't he didn't say negative stuff about the oil business, and he kind of showed that he's for that. And so to acquire kind of that right wing view that electric vehicles are bad, and to kind of work with Trump on that, I think it can be very positive as long as interest rates start to come down.
And then what's going to happen? Isn't August a slower month? And then what's going to happen with the as it leads up to an election in November?
Yeah. So historically speaking, Tom Lee from Fundstrat does a good chart about this. He talks about how August is historically the month that bottoms, especially where bottoms are formed, especially in a election year, and September is a little bit lower, and October as well. So that's the question: is did what we saw with the carry trade was that the bottom for this repricing of and pullback of the market?
Okay, wonderful. I think we can call it a day. We'll continue this again next week. Thank you for joining us. Please follow the panel. And of course, there's Cyber Bulls, the speaker there. Follow that. We do this every Tuesday at 3 p.m. Pacific time. Thank you, everybody. Appreciate your time. Talk to you soon. Bye-bye, everyone.
Thanks, everyone. Bye.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.